Currently, there is a high demand for housing units, with the country grappling with a 200,000 housing units per year deficit. Though a high demand for houses, the latest housing index by the Kenya Bankers Association points to a gloomy picture for housing developers after house prices remained flat between March and June this year, defying growth that has been witnessed since 2013. The report shows that there was a decline in demand for houses in high-end areas as potential owners opted for cheaper houses in low and medium-income areas.
Market is now shifting from the high end to the lower end, and the rise in prices on the upper end of the market is much lower than it is on the lower end of the market, and therefore if there's any response on the supply side, then you tend to see that happening on the lower end of the market because that's where the demand is.
The report indicates that the capping of interest rates has lowered the purchasing power of potential buyers and limited financing for developers.
You can imagine if there's a credit reduction, the people who are actually going for credit towards home acquisition and they're not able to do that, to get that, simply says that will constrain credit. And therefore, those who are putting units up in the market will find themselves either having units that they are putting in the market that are staying longer before being sold, and therefore that informing their decision on how they're going to put further units going forward.
Apartments accounted for 82% of the total number of units sold, even though buyers kept off those that had extra facilities, such as swimming pools and elevators, on cost concerns.
Going to be of a high price, and there are very few people who are going to demand that. That will mean that therefore those houses will remain unsold for a longer period. So affordability is the core driver in terms of both what the investors are doing now and what the investors will continue doing going forward.
The report projects a further reduction in the price of houses if tougher credit access conditions persist.